Hello everyone. Today is Friday, April 18. Let's take a closer look at the euro and the British pound charts to assess potential market shifts. The euro continues to trade within the narrow range it established late Wednesday. Thursday's session saw limited volatility even after the European Central Bank's long-awaited monetary policy decision. As widely expected, the ECB lowered its key interest rates by 25 basis points, cutting the deposit rate to 2.25% and the main refinancing rate to 2.4%. The market response to ECB President Christine Lagarde's remarks was similarly subdued. Lagarde noted that new US tariffs on EU goods are already weighing on the region's economic outlook, further slowing growth momentum. Speaking of inflation, she emphasized that uncertainty continues to dominate policymaking. Although euro area consumer price growth is gradually approaching the ECB's 2% target, that disinflationary trend may lose steam amid the fallout from President Trump's tariff escalation. In response, the ECB moved to stimulate growth by initiating rate cuts, with officials signaling that more may follow this year depending on how inflation evolves. Against this backdrop, the euro-dollar pair remained range-bound, though encouraging economic figures could open the door to a near-term breakout on the upside. Today's macroeconomic calendar is light, with no major data releases aside from Italy's trade balance and a speech by Federal Reserve official Mary Daly. As a result, markets are likely to remain subdued. Risk assets are currently hovering near local highs, and it's a Friday. A breakout seems unlikely. In this context, entering long positions at current levels is too risky. A more prudent approach would be to consider buying in pullbacks or corrective moves. In particular, the 1-hour EUR USD chart indicates that a false breakout at 1.1341 would generate a buy signal, pushing the pair up to 1.1405. A breakout and consolidation above these levels would open the way towards 1.1467 with a key upside target at 1.1526. At this mark, I would recommend going short on the rebound, anticipating a 40-50 pip intraday correction. Short positions at 1.1405 and 1467 should only be considered following a false breakout. In a bear case scenario, if the price breaks through and fixes below 1.1341, the euro could dive to 1267. At this level, long positions would be relevant on the false breakout. Long positions on a rebound should be opened at 1206, targeting a 40-50 pip correction. Turning to the British pound, market activity is likely to stay subdued, although the pair has approached its one-month high. A false breakout at 1.3287 would generate a sell signal, dragging sterling down to 1.3245. If the price breaks below this level, the pound-dollar pair could dip to 32.05, potentially reaching 31.65. At this mark, it would be wise to go long on a rebound, targeting an intraday correction of 35-40 pips. The optimal strategy would be to go long on a dip at 32.45, the midpoint of new sideways range, or on a false breakout at 32.05, the lower boundary of that range. On the flip side, if sellers fade to control, sterling could extend gains to 33.37 with the key target at 33.80. At this level, I would recommend going short on the rebound, aiming for a 35-40 pip pullback. Short positions at 32.87 and 33.37 would only be justified following a false breakout. Good luck to everyone and enjoy your weekend.